bring in Scott Bauer. We've got the CEO of Prosper Trading Academy joining us to take a look at the numbers here. Scott, 243,000, a little bit above analyst expectations, but probably still nothing to get too concerned about here.
No, nothing to get too concerned about, but that is, I would say that's an outlier number actually on a weekly basis. That's a pretty high number compared to where we've been in the 210 to 220 range for a while. But it's a one-off. It's only a weekly number. It's a one-off, but that is a higher number. But we just have to watch to see if that continues to be a trend. I'm really focusing more on the Philly Fed number that came out. Ben, that's a much hotter number than expected. From the manufacturing side, we've seen manufacturing numbers be pretty weak. This one's much better than expected, or much higher than expected.
Okay, to your point here, Scott, I am going back a bit here. Now we had 242 in the middle of June. That was a bit of an anomaly. It spiked up from like 229 and then right back down to 238 after that the following week. I did look here going back to August of 2023. You have to look back to find a number that came in as hot as this one, 243, again, a little bit higher than expected. But the Philly Fed here was pretty strong, right? It was interesting because prices paid actually came in below last month, which I think is a good thing. New orders, employment was up, business conditions way up, manufacturing index, again, topping expectations. So seeing prices come off, maybe that explains why the market isn't really too spooked or too concerned about this number, as you mentioned, hotter than expected.
You're right. You're absolutely right. Because if those prices weren't lower, we would probably have seen a quick dip in the markets, and we didn't. And in fact, looking at the 10-year, I think right before these numbers came out, the 10-year was sitting close to 419.
And it's actually a little 416.
Right.
Yeah.
Exactly. It's actually lower from there. So, probably good numbers overall. I don't want to keep saying these numbers are good or bad for the Fed, because I'd rather focus on if they're good or bad for the economy.
Yeah.
I think one is pretty good. One is a bit concerning, but the weekly jobless claim number could just be a one-off.
A bit concerning, Scott. Where's that threshold where you shift from a bit concerning to a little bit troubling? Is it 250, 260, 270?
I think this range of 240 to 250, but if we see that continue, if we see two or three more like that in a row, again, to have a 1 week number, kind of hard to just say, But if we continue in that range there, then that becomes a bit concerning.
Okay, let's talk a little bit about markets. Mention the indices. The S&P is hanging out at 5650, so really no change there for the most part. This week, though, we have seen the dollar come under pressure. You talked about, you mentioned yields, which have come off. There's been some other contributing factors, right? The euro, which has firmed up. Sterling also firming up following that CPI data we saw earlier this week, and some wages figures this morning as well.
And also, you know what? You can't discount the yen, even though it has just been absolutely clobbered. It is off of its lows.
Yeah.
So, you look at all of that, and that has put a little bit of pressure on the dollar.
Okay, so what do we look to now in terms of that influential factor if the dollar is going to continue this trajectory lower ultimately? Because in theory, that could benefit stocks, one could argue, especially if we see rates coming off at an acceptable pace, right? A major jump lower or spike lower would not necessarily be a good thing. It might raise some concerns, but kind of inching lower following the data and Fed comments, I feel like the market's willing to accept.
Inching is always better than spiking. In either direction, it is always better for the markets. And I think the next big impetus, you have two things. One, you've got PCE next week, which obviously is a really big number.
Yeah.
And then we have the Fed decision, which, all likelihood they're not going to lower rates. But we've seen a lot of the Fed members start to become very dovish, saying, you know what, we are seeing the data that supports a cut. Is Powell going to follow that as well? And then, boom, right after the Fed meeting, the end of the month, we get the July jobs number on that Friday. So the next couple of weeks are going to be pretty significant between PCE, the Fed, and then the July jobs number. And then, you know what? Right after we get that July jobs number, the next Fed meeting is only 6 weeks afterwards. And that's the one everybody is focused on now with basically the market pricing in 100% probability of a cut then.
I like this, Scott. You're taking on this kind of fatherly role here, right? Life lessons, always better to inch rather than leap, right? In terms of also as far as the Fed here and giving us that kind of heads up, right, and giving us a reminder to sort of get some rest because it's going to be a busy couple weeks here, it sounds like.
It is.
Talk to me about the ECB. Maybe no surprises here, right? You mentioned the Fed's probably not going to raise rates at the July 31st meeting. I don't think anybody thought that Christine Lagarde and her counterparts were going to here, but that September expectation is starting to inch its way up, though.
I got a couple minutes just to read, the briefing on ECB holding rates steady here. And from what I read, it almost looked like a copy and paste from our Fed here, from the details that we saw here that, things are moving in the right direction. They're worried that it can change real quickly, but things are moving in the right direction. One thing I would say, and this was from, a top level here, it looks to me like the economy is weaker, in ECB and in the euro area than it is here from everything that I saw. But it certainly looks like the probabilities are a September rate cut for them as well. And their markets are pricing in 2 cuts for the rest of the year.
Yeah, just real quick to that point here, I'm looking at some of the comments in the statement. Services inflation, they say, is elevated. Headline inflation likely to remain above target well into next year. And we did have some data overnight. If we could just pull real quick a look at that UK employment numbers, because this also stood out a little bit here. Then, Scott, we're going to let you get out of here. I did notice that the bonus numbers had come off a little bit, but the employment change was up significantly. So, again, those numbers did stand out a bit. There they are. You can see UK employment data. Scott Bauer, appreciate you joining us here, taking a look here, breaking it down, financial markets here, and some of the central bank recent developments, CEO of Prosper Trading Academy. Again, Scott Bauer, thanks to you